This is Ken Jacobson, a senior mortgage planner and loan officer at Home Trust Mortgage, with your mortgage market recap for the week of September 1 through today, September 5th. A lot happened last week that can impact both interest rates and the housing market. Let's break it down. A federal appeals court ruling rattled the bond markets, including mortgage bonds. They're challenging the administration's ability to impose tariffs. If it's upheld, it may mean the U.S. would have to repay a huge amount of tariff money already collected. Why does that matter to you? Because more government debt makes investors nervous. And if the bond markets trade off, mortgage rates will go up instead of down. The job market is clearly cooling. Job openings fell. Private payroll came in low. And the BLS jobs report showed only 22,000 jobs for the whole month of August. That's for the whole country. Even June's numbers were revised lower into negative territory, ending a 54-month streak of job gains. At the same time, more people are being forced into part-time jobs from full-time jobs. The broader unemployment rate climbed to its highest level in 4 years, 8.1%. Why does it matter to you? A weaker job market makes the Fed rate cuts much more likely, potentially lowering borrowing costs for buyers and giving my realtors more momentum in the market. Applications and activity. On the housing side, applications to purchase a home were down a little bit last week, but are still up 17% year over year, showing a lot of pent-up demand. Refinances were up 20%. A lot of people are refinancing now that rates have moved a little lower to pay off all that credit card debt. This activity tells us that buyers are still active, and lower rates should bring even more people into the market. The Fed's Beige Book, that was released. That's an anecdotal look at how the economy is doing across all Fed districts, all 12 of them. Weak growth, flat job conditions, even one district was in contraction. For housing, this reinforces the idea that the Fed is leaning toward rate cuts in the coming months, which could improve affordability for our buyers. So here's the takeaway. The job market is clearly slowing. The Fed is poised to cut rates, probably starting this month, and buyer demand remains strong. If you're a home shopper, it's a good time to make your move. If you have not applied, do not wait till you find the house. You're going to miss out. They're going to get 2 or 3 other offers, and you're going to be trying to apply, get a credit report, get an approval letter or a qualification letter, and the house will already be gone by the time you can make your move. Call me and we'll walk through the numbers. And for all my realtor friends, all those people that have been riding the fence with you for a year or 2 years, now's the time to try and get them off of it. I'll continue to keep you updated and apprised of what's going on. If you have questions about how this market affects your ability to purchase or refinance, give me a call and we'll walk through the numbers. 832-524-5253. Thanks for watching. Have a great day, a great weekend, and God bless you. And be safe out there.